Hey everyone, my name's Jack Statza. I'm thrilled to be moderating this panel on the mainstream adoption of AI and DeFi. We're going to go deep on product market fit, user behavior, and momentum, and how AI and crypto intersect in a way that's not just useful, but not hype-driven. So let's start with intros. I'm going to go first here. I'm a partner at Alumni Ventures. We are one of the largest venture platforms that democratizes access to individuals to get into the venture asset class. We've raised $1.5 billion in AUM from retail since 2014, have 1,500 portfolio companies, and I've invested over my career in 100 companies, mainly in AI and Web3. We are actually currently raising our AI First Fund, which is backing early stage founders using AI at the core of its foundation. 10K minimum gives investors access to curate a basket of early stage investments. You can find out more at av.vc or this QR code I have here. And now that my shameless plug is done, I'm going to go to Sam. And Sam, can you give an intro for the audience?
That was an awesome plug.
Appreciate it.
Well, thanks everybody for joining us for this panel today and listening to what we have to say. I'm thrilled to be joined by the folks up here on the stage. All very experienced and insightful in their own right. So I'm at CMT Digital. CMT Digital is a subsidiary of the CMT Group, which is a 28-year trading and investment firm by background. CMT Digital, we do three things. We're active on the legal and regulatory side of things, so members of the Blockchain Association, Chamber of Digital Commerce. Trying to push the regulatory agenda forward. We also have a trading desk that trades globally. And then I'm on the venture side. We've raised 4 venture funds throughout our history, starting in 2018. We're a registered investment advisor, primarily early stage investments in the blockchain and digital asset space exclusively. And I think at this point we've made over 150 investments in the space. So generalist strategy, and really excited to get into the weeds of DeFi and AI today.
Thank you. Daniel?
Awesome. Thank you everyone for coming. My name's Daniel, founder and chairman of Coinflip. We're the world's largest crypto ATM company by volume. We have about 6,000 kiosks across 10 countries, have an OTC desk for high net worth individuals and companies to trade with us, a wallet and an app, and a venture arm that invests in small crypto companies. We also just launched Coinflip Gradual, which allows people to allow their employees to get paid in crypto. So if you guys know any employers that want people to get paid, get their paychecks in crypto, please let me know. And I also run Polotsky, which is a family office where I just do operate and invest in small companies. So thank you, everyone.
Great, thanks for that. All right, so Sam, I'm going to start us off here with a question to you. I want to start with something I think about a lot as an investor, like in the Web2 AI world, because I have an AI fund and a blockchain fund. When I see product market fit, I'm looking for accelerating ARR. But in Web3 world, there's different signals you look for. It could be around liquidity, stickiness, community behavior. So as a VC investor in Web3 at CMT, what do you look at beyond raw TVL when you're looking for signals with a startup?
Yeah, great question. We'll go like very high level and then down into some like actual metrics that we look at. But I think DeFi is a super broad category. We're kind of coming into the age of the consumer app where a DeFi application can go directly to the end consumer, but a lot of other DeFi applications or like a lot of the earlier DeFi applications are actually like in this DeFi Lego construct where they're building a piece of infrastructure that will actually plug into other infrastructure in more of a B2B context. So like it really depends on which side you're looking at. I think on the more B2C side of things, like business to consumer, you can analyze kind of traditional metrics. So cohort analyses of active wallets and do they show customer love of an application in whatever way it is? Are they increasing their deposits into some interest-bearing account? Are they do they come back and actively trade? Do they bring their friends? And then I think you have to contextualize that against the backdrop of like if a token exists. If a token exists, then you want to see that this protocol is judiciously allocating their token for incentives, right? I mean, like I think the mistake that maybe a lot of people have made in the past is that they consider their token as like a free kind of marketing budget. But if you believe that the value will accrue to your token and that you're building something massive, then with the benefit of time, if you are successful, those token allocations that you gave out in the early days are going to be like extremely lucrative down the line. So you have to balance the two things of like wanting to bring in the community and align them with your goals of building with them and including them versus like what your actual marketing spend looks like, and do you have a healthy budget for marketing spend? So those are some of the things that we look at, but I do think TVL is probably the most accurate metric to kind of if you're just on your face going to kind of judge a protocol, what you should look at, and you have to determine if it's mercenistic or not, and a lot of just one last thing to round out this answer. I think like the secret sauce in the allocator, in the early stage venture allocator arena is really like, what is the latent insight? What is the undiscovered insight that gives you confidence that something's going to be big? Because if everybody knew, that this is the metric that you look at and this metric's ballooning, like then everybody's going to want to invest in that thing, and the valuation is going to represent people's expectations of how large that will be. But a lot of the secret sauce is looking for a new metric, and understanding that is the key criteria on which to judge a protocol.
Just a quick follow-up to you here. Is it for the founders in the audience? Is there anything you see a lot of times missing from their pitch decks you wish they'd include?
Yeah, it's interesting in like this highly disintermediated space where you're talking about automating everything, like especially at the early stages, you always go back to the founder, like founder background, founder passion. Like it's like you're investing in people ultimately at the end of the day. So like I want to know a founder's story. I want to know like why they get up in the morning, like why they're willing to, as Elon Musk says, like chew glass and stare into the abyss to like build this company for the next 10, 20 years of their lives. So I don't know how that's like necessarily reflected in a pitch deck, but I think that's oftentimes like the most overlooked type of thing in general VC pitches.
Thanks, Sam. Daniel, Coinflip's been on the front lines of retail adoption since 2021. How have behavioral shifts changed from everyday user flows and how they engage with ATMs and onboarding flows?
Yeah, for sure. I mean, I think that, well, we've been around since 2015, so it's been almost 10 years now, and I think that when we started, I mean, it was just way more of a niche crowd. I think it just happened to be that there was just very few ATMs, so we were very lucky to be basically like one of the first players in the space. But I think that like now, I mean, I think it's just like the crowd is just like very, very diverse. Like there's just way more people that use the kiosks and use our different like offerings. Like now it's people who want instant settlements so they could maybe like speculate on an NFT drop. It's like a farmer who might like, not trust like all their money in a bank or whatever, kind of like a libertarian, like mattress hoarder. It could be somebody that like primarily gets like paid in cash. It's like all these different types of people that use the ATM. It could be somebody that wants 24/7 customer support, and like Coinbase is really intimidating. Like I still can't reach anybody at Coinbase. Like I think it's basically like impossible. Like I think the only way is people have literally resorted to like calling them out on Twitter to get like any sort of response. So I think like kind of like holding your hand through the process is big. So I think there's like a lot, like the way it's really changed is there are just a lot different types of people that use it versus before it was just kind of really a niche audience because most people didn't even know what crypto was back then. So it's been pretty cool to watch, I think.
Appreciate it. And a follow-up there. If you created Coinflip in 2025 today, would you still go hardware first?
I wouldn't go anywhere near a crypto ATM in 2025. Like, it's such a regulated space now. I think if anyone wanted to start this company today, I mean, I think the number of crypto ATMs are definitely going to go down as all the states regulate, as the federal government regulates. Like, you need so much like compliance and regulatory employees and just overhead that the model just doesn't really make sense if you have just 5 or 10 ATMs or even like 100 ATMs. So I think that right place, right time. Hopefully, we get to develop those regulatory moats. But also, like, we're not really like a hardware company. Like, the hardware is basically just like, we don't sell the ATMs, we operate them. So it's more like the kiosks are just a automated way to, like, back in the day, people would be meeting up at Starbucks, and like that's how I bought my first Bitcoin, like putting cash on the table, like pushing it toward them, QR code to get the crypto. So it was like really sketchy, not scalable, not safe. So the ATMs just kind of like automate the process of a person. So I would kind of almost view it as like hardware as a service, sort of. But yeah.
All right, appreciate that. All right, so now some lightning round questions. You guys can jump on either of them. So, all right, first one. What makes AI DeFi projects launched today feel 2025 native, not just 2020 DApps with a GPT wrapper?
Well, I think that just like now you can at least like there's actual use cases, like ever since, LLMs have become big, like now there are actual protocols like Render where you can actually sell compute power. Like before, like there's always been like decentralized networks where you could do that, but like people are actually using these networks now, I think. Before it was just kind of all hype, like BitTensor, where you can actually like give people, or at least other people who are trying to fine tune their trading algorithms, like access to these models. So I don't know, I just think it was like, if there's anything in 2017, it was complete garbage. If it was anything in 2021, maybe like there was some usability, but I actually think just the difference is that people are actually, and companies are actually using it now.
All right. Sam, anything there? Or
Yeah, I mean, I think from like a high level, we all realize that AI is going to have an extremely profound effect on our lives. And so, from like both a defensive and offensive standpoint, I think people realize that blockchain and digital assets need to be married to AI. So, from a defensive standpoint, you have a non-deterministic technology in AI that, is prone to go off the rails. Perhaps you can keep it on the rails by, putting some sort of like decentralized trust machine, i.e. blockchain, in the middle. And then from an offensive standpoint, like the potential of AI meets DeFi and automating finance to a greater extent than just like, over collateralized money markets is absolutely massive. So I think we all, I bet most people in this room are using ChatGPT or Perplexity, and you just see the rate of change, which is truly astounding. I mean, it's like we're all together living on this exponential growth curve. It's like you better incorporate this technology into every aspect of your life, or you're going to get left behind.
For sure.
Very true. Next question I'm going to get into is about how AI messes with the user interface. So I'll give some context here. One of my Web3 AI founders mentioned to me that she thinks that conversational bots and chatbots in the apps actually cause more friction because either users don't ask the right questions so they don't get the right answers back, or it just becomes more text-based and more complex. So what are you guys seeing teams doing or failing to do that's actually simplifying the UX experience and retain users with AI?
Yeah, I mean, I think AI. So in crypto meets AI, there's a lot at stake because you're oftentimes talking about your assets in a wallet that you're delegating to a certain agent, and they can do something with those assets, and a lot of times they'll just lose your money. And so I think like the broad-based statement that I'll make is that like crypto's finally starting to care about user experience, and AI is really only like a complement to that. So Coinbase support service should be all AI, right?
Something.
something. I feel you. And that'll just, I think improve the user experience. I think founders recognizing what's at stake. I mean, pretty much every time you're using, crypto meets AI, it's in like the agent context. And so, asking clarifying questions or just like repeating back to you. And if you're trying to use like an intent-based system, so what you mean to do is this, correct? Instead of just like going ahead and doing it. I think those like safeguards are warranted.
All right, thanks, Sam. How much time was left, guys? I couldn't even read that sign. 5? All right, so I'm going to do some quick hot takes here, and then maybe we'll get some Q&A from the audience. So I'm going to ask 3 questions. You just say over or under, or bullish or bearish. All right, here we go. AI-generated yield strategies will be retail-ready in 18 months. Bullish or bearish?
Bullish.
Bullish, but it doesn't mean they'll make you money.
Number 2. RWA markets are the biggest untapped opportunity for AI DeFi. Agree or disagree?
Disagree.
How do you define RWA? Disagree.
Real world assets? I don't know.
Yeah,
I
disagree.
think it's definitely trading is the biggest. Analyzing smart contracts, like analyzing like interoperability between chains, like that kind. I think people are going to use a bunch of DeFi co-pilots for trading. I think that's going to be the biggest one.
Okay. Last one. By 2027, AI agents will execute more than 50% of DeFi trades. Over or under?
By when?
2027.
Beginning or end of year?
Give me both, because you've drilled down here, apparently.
50%?
Okay.
Yeah, probably.
Over?
Yeah. Over.
Okay.
Over, yeah. Bullish.
All right, I think we got maybe like a few minutes. Any questions from the audience for the panel? I don't see that. Right there.
Or like an upswing that.
Hello?
Well, I think if they're using all the same models, then it would decrease volatility because everyone would just kind of do the same thing. But I also don't necessarily think that that's going to happen. So,
They're all using the same models. Doesn't that create more of an issue where they actually have the same models?
Well, I think that there's going to just be no edge then if they're all using the same models to trade, right? Because if everyone's doing the same thing, then you're just going to crowd that trade, and then the people doing the opposite are going to, people that create a more sophisticated model are actually going to have the edge.
And what happens when there's a bug?
When there's a bug?
Yeah. So this is like the 2007 crash that we talked about.
Are you saying since it's so concentrated, everyone's using the same model, there's a systemic risk?
In the model?
Yeah, I mean, I think if people are using the same model and there's some sort of malfunction, then that's going to affect more people than it would if people were using different types of models, had basically different counterparty risk, as opposed to everybody using some agent on a given platform. I do think that for me sometimes the simplest answer is the true one, and I think you hinted at this earlier. I think the biggest beneficiary of agents trading on your behalf is not necessarily these AI companies, but it's the exchanges and the infrastructure on which they trade. It's just more trading volume, across these exchanges, more different viewpoints being expressed. I can express one viewpoint, per unit of time or something like that. But if you have 20 agents trading, you can express 20 viewpoints per unit of time. So I do think that trading volume will proliferate. Everybody's going to have a different perspective. You're going to have some combination of just buy and hold, strategies, but then you're also going to be able to have actively managed and very nuanced strategies that you can, eventually your financial advisor will advise you to do based on, an AI, de-risk kind of AI bot.
And I think AI won't necessarily be very good. I mean, could be wrong. I don't know. It's getting better really quickly, but I think it might be good for automating short-term trading strategies. But I think it's going to be hard to ask an AI what's going to happen in 15 years for a long-term investment. But short-term, yeah, there could be some fluctuations. I mean, I don't know. It's all very new. So anything could happen.
Yeah, I mean, if you've ever read like the book like Market Wizards, like there's 100 different ways to make money, right? And like so, you know, there's going to be that people that make a ton of money with AI trading bots and people that lose a ton of money with it as well. But it's just going to amplify, like, I think, the number of participants in the market.
All right, well, I think we've hit time. Unfortunately, can't get to any more questions, but thank you all for coming today and seeing Sam and Daniel here talk and myself, and have a good time at the rest of the conference.
Yeah, thanks everyone.
Thank you,
Thanks,
everyone.
Jack.